Brian is one of those rare entrepreneurs who have been doing a lot of value based work. His holdings are more than 100 companies, and he has been helping a lot of companies who are going down, and he has ethically helped them to come up. You would enjoy this conversation where Brian speaks about two of very innovative products that can be game changing. You would also understand his values as he speaks about the good that he wants to do the world. So enjoy this podcast. Thank you. Hi, Brian. Nice to meet you. Nice to have you on the podcast.
So nice to be here. Thank you so much.
Before we move ahead and we dive into very different worlds and what's going on with IoT and blockchain, let's start with the introductions first. I would want to know about you, who you are, where you're from, and how did you get started.
Oh, absolutely. So Brian J. Esposito, it's over 23-year journey on my professional career, always as an entrepreneur, starting, building, acquiring, and merging with companies. Over the last 23 years in my private holdings, known as Esposito Intellectual Enterprises, there's over 110 companies within there. There's a reach of over 200 joint ventures from around the world, and we're proudly operating in over 25 different industries. I tend to look at it like an arsenal or resources such as IP, technologies, products, solutions, and services, and then great management in place to help fuel these companies and push them forward. Then they're protected by great legal, accounting, compliance, and regulatory. And then they're further supported by our investment banking, private banking, and strategic capital partners. So that's been my journey in my private career. In August of this year, or actually August of last year now, I can say, of 2023, I was asked to take over a public company known as Diamond Lake Minerals. Ticker symbol in the U.S. is DLMI. So what I've done there is I changed the complete structure and strategy of the company, turned it into an old school GE conglomerate multi-strategy operating company. We have a parent company on top, and then all these different subsidiaries that are industry agnostic beneath that, much mimicking like what I've done in my private career. The stock was stuck at 35 cents for a very long time. Since taking it over and building a great team and support around me and changing the direction of the company, we're now sitting at $5 a share. We've added about $140 million to market cap, so the market is loving what we're doing.
Wow!
And the concept is also really strongly first of its kind hybrid of traditional securities such as stocks. And we're bridging the gap of the future of digital securities. So each of these subsidiaries within our holdings and future holdings will have security token offerings. So it's not crypto, it's not NFTs, but it's actually regulated by the SEC digital security known as security tokens. So utilizing this mechanism, we're familiar to traditional investors that know how to buy a stock, but also opening up financial vehicles for people around the world to buy into some of our business units to be part of the upside of what we're building.
You're living the dream. You mentioned 110 companies, right? Are these all running companies, or it's over a period of last 23 years?
Correct. Yeah, there's some mature ones. There's ones that are in their growth stages. There's some in their infancy that are just getting going. And then there's a couple that are in their concept phase that'll be coming to market soon.
So you might be having a very large team who will be managing all these companies, or maybe a small team. What's your team?
The internal team at Esposito Intellectual Enterprises and the parent holding company, it's very small. It's myself as the main principal and only shareholder. And then underneath that, there's key teammates to help organize and manage. The holdings themselves all have their own leadership and CEOs and management and team members. So as it trickles down, the team is very large, but they're all within their own businesses. But at the top, it's a very small core team of people, a lot of legal and accounting and compliance that are there helping managing and organize everything as well. So 23 years, that means you started in 2001 or 2000? Well, it's over 23 years. I actually started building companies as a teenager, but it got more formalized in late 90s, early 2000s. Yeah, but I've always been an entrepreneur, always out hustling and earning money every way I can figure out how to earn and provide value. Which was the very first company that you built, and which was the first major success? Late 90s, I built the first B2B, B2C e-commerce platform for the beauty industry. So late teenager, created a online, first of its kind online marketplace for professionals. So these are salon owners, hairdressers, estheticians, to be able to buy beauty products. but also within that same platform, the retail consumer was able to buy our beauty products. So, we became a very quick sensation, moving beauty products all over the world. And I launched over 1,200 brands building that company. I was the first Amazon Luxe beauty retailer. I was Jet.com's first retailer. I was the first website to launch, even though it was a failure, the Google Wallet in the early 2000s when that came out. That was an amazing company, but I used that company and I got to build brands and distribute brands with some famous icons, whether they're entertainers, athletes, celebrities, musicians, actors and actresses. But that was my engine to help continue to go out and build other companies, start other companies. So that beauty company and the reach that I had and the relationships that I built and the very substantial revenues that were coming in was the fuel for me to keep building what I was building, or what I am still building.
So the beauty company was a great idea even at that time, like end of 90s. How did you find that idea? Because I want to know your entrepreneur mindset, because 110 companies holdings and from last, let's say like 25 years or 30 years, around that much time. How did you find what you're going to do? Because at times there are different kinds of entrepreneurs. Some may want to do one thing all their lives and want to compound it to make it bigger. You come from a different set of entrepreneur who would want to be invested in many other things. So what keeps you going? How did you get inspired? How did you go into these things?
Well, I was driving around to salons in the New Jersey, New York, Pennsylvania market, trying to sell nail polish and shampoos and hair dyes and blow dryers. And between traffic and making appointments with these people at these locations and then not being available, or they're working on a client, I was just very frustrated. Even though I had great brands to sell and offer them, getting their time and attention was never easy. And then trying to hit as many locations as possible throughout the day was never easy. So I said, I got to build a mousetrap to bring people to me. So thankfully, I love tech. I was always around computers. I taught myself how to code. Well, initially, I went to companies in the late 90s to hire them to build what I wanted to build. And it wasn't like today where you have Shopify or Wix or WordPress. It was millions of dollars of what I wanted to build. And that wasn't an option. So taught myself how to code, got very clever. Aesthetically, I tend to always have a good eye of what looks good and what looks appealing, whether virtually or in person. I just know how to connect with people, color schemes, and something that looks soft and easy and trustworthy. That was one of the most important things. Was I had to have a website that looked very trustworthy, though. So I had to have partners on there like UPS and certain credit card companies that that was okay to use their branding at that time. So a lot of it was ensuring that, hey, this is at the time as safe as possible, and you will get your product shipped to you as quickly as possible wherever in the world that you are. So once I created that mousetrap, it just took off like wildfire, because anybody anywhere looking for the products that we had, and I quickly began to obtain a lot of products as people wanted to be on our site and our network. We were the only ones that would come up because nobody else was in that market that was looking for these things. And also at that time, there was a hell of a lot of other different search engines around the world that don't exist anymore. So we just had a big magnifying glass on what I was building. But also that put a big target on my back, because I created a brand new distribution channel for these brands. So I was upsetting a lot of distributors, I was upsetting a lot of retailers. I was getting sued by manufacturers, even though they wanted to work with me. They had to protect their traditional distribution model. But nobody could move product like I was moving at that time. We were selling so much of everything, which was exciting. The downside to that was I wasn't ready for that type of success as late teenager, early 20s. If I was doing that now with the mindset that I have now, we would have been bigger than Sephora. But you evolve, you grow, you learn, and I'm grateful for all those experiences. And a lot of brands that we launched, this was one of the disappointing things. I would find brands that typically women were making in like their homes or their kitchens or their bathtubs, but they had this cult following on message boards, or you can identify where is there an audience and they need a place to buy the product. We were the place to buy the product. So I would help these companies become very successful through our distribution and through our credibility and support. Then they would get big orders from Targets or CVS or Rite Aid, Walgreens, Ulta, Sephora, even Nordstrom, the big box beauty store, big box department stores. And then they would cut me off. So that was disappointing. I was there to help them grow, but they would get rid of me because they got a better deal. Or those companies had a huge exit where Estee Lauder, L'Oreal, Revlon, Louis Vuitton would buy them out for hundreds of millions, for billions of dollars, and I would have no attachment to the upside. And I also lost the brand because those other companies have their own distribution channels. So that's why I started building things. And in my mind, I said, I need to own as much equity as possible. I need to own as much as the pie as possible, because people have business amnesia, which I tend to say all the time. They forget who was there to help them become who they are, and then when they have an exit, you don't get your participation in that. So you have to have agreements, you have to have contracts in place. And from my side, I need to own as much as possible. And instead of people using me and inviting me into their worlds, I needed to change that and invite warranted people into my world. So that's what I've been building, and that's where I currently am present day.
Amazing story. I think I am somewhere around where you found that, because from last 15 years, we are making lots of strides in our world, and companies in US, India, Canada, Europe, we are working for them and creating amazing platforms for them. The ones, as you mentioned about user experience, we truly deeply understand that. And what I found out lately was that we are engineering these products, we're making these products. Most of these companies that our clients are building and we are maintaining are becoming so huge. And they'll cut us off ultimately. When, after a certain period of time, they'll have a much bigger team and they'll have an in-house team and all. So yeah, I've taken the same path you do, that we'd be building our own products as well by the side, and that's what we are doing right now.
Those companies that are using your talent to help them build their products, like, part of your package to them should be an equity component in that company.
Right.
Therefore, if they do take some of your team members or they build their own in-house team, at least you're still part of what you help them build. That's what I changed my mind. If I was who I am today and I had equity in all those 1,200 brands that I launched, and I would have gotten it because they needed me, I just didn't know to ask for it or to structure it that way. In my mind, I was just happy to get the business. I was happy to be an ant farm, getting the products and reselling it, and getting the products and reselling it. But now what I've learned is you're using me for my talent, my time, my resources, my access. Therefore, I need to have an equity slug in that company. Otherwise, you're not getting any of that.
How did you first make that deal, the first equity deal? And maybe they all were not success. Did you ask directly? How do you do that? Is it as simple as going and asking, hey, I need about 5% of the equity for the work I'm doing, and I'll maybe give you a discount over that? How do you do that?
Yeah, now it's a very simple model. If companies want to bring me on, they write me a package because my history is there, it's tangible. So if a company hears this interview and they want to bring me on, they write up a proposal. Here's a package for you to join the team. Early on, it was a lot of trial and error, because I'm not wired to ask for things. I want to help people. That's my nature. But I don't want to be taken advantage of or screwed or chasing people for crumbs. That's a terrible place to be. So it was trying to do that dance of, what do the funny thing is, I still don't ask for it today. I assume people will offer me the best that they can offer me. So that package or that proposal comes to me. I mean, it can't be 0.0001% equity. That's not realistic. But my only ask is, there is an ask, I need a fair starting point that allows me to speak on behalf of the company, that allows you to say, hey, Brian Esposito, look what he's done in his career. He's part of our team. He believes in us. He owns X amount of equity. But as we grow and I'm performing and the company's growing, I want to be able to earn more. So that is my ask. I want to always have the ability to continue to earn more as I'm performing and as the company's growing and I'm adding value and opportunities. But there's always got to be baseline, some fair number that allows me to speak on behalf of the company as an equity holder and values me for my time.
What was the first story that you went to the team and said, hey, I'm going to help you in this, and I need this much equity?
That's a great question. I don't even know the first story. I know my first story when I was building companies, I was giving away equity like it was water to people. I don't do that anymore either because I'm a giver. I don't know the first story. That's a hell of a question. I don't know because this has been one chaotic journey that I've been on. So I don't have that magic moment burnt in my memory where I can reference it. I don't even know.
No problem. But now that you do it, what's the kind of equity companies should look for when they're building things? What's the kind of equity
for someone like me to join?
Yeah,
it's a tough question to answer because it depends when I'm asked to join a company on their company life cycle. Like if it's early on and it's in concept phase, then it should be a fair amount that allows so I'm an entrepreneur at heart always, so I want to, when they're my companies, they're my rules because my ass is on the line, but when they're other people's companies that want to bring me on, I want to protect them because I needed that when I was building. I want them to understand their equities like oxygen. Every point is precious, so they need to always have control of their company because it's their vision, it's their heart, their passion that they set out to do. I want to have a fair piece. The rest of the team should have a fair piece, but then you have to also think about, okay, we have the company has to raise money. That's the rest of the currency that they have to exchange, equity for money. So you need to have a really strong valuation done. A lot of companies miss this. Like you need to understand, what are you really worth day one? Because when you're going out and raising money, that's the most pivotal point of what are you giving away of your 100% pie for cash coming in. So you want to give away as less as possible for as little cash as possible that you need to get the business going. And I try to show companies, you can't be on this raising money, running out of money hamster wheel. You need to be on this, I don't know when this changed, but usually if you went into business, you're supposed to go out and make money. You're not supposed to go out and create nonsense, repetitive valuations and keep going to the market and raising money,
right.
and raising money. That's not being in business. That's a dog and pony show. That your business shouldn't be raising money. Your business should be selling your software, your IP, your technology, your product solutions, your services, whatever it is. That's your business. And don't think you need to do billion-dollar deals to be successful. Create your product or whatever it is with your business. Bring in as little money as you need as possible to create that product. Go into the market and sell it. Go into the market and try to find the right pricing to sell it. And then look at your company and say, okay, we built the product, we sold it, we made a little bit of money, this model works. We lost a little bit of money. We have to see what works, what doesn't work. Everybody wants this quick satisfaction, quick, rich nonsense. It doesn't work. And this obnoxious behavior that these funds do to brainwash people and companies thinking they have to constantly raise series A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. It's not reality. It's less than the 1% of the world get to go on that journey and actually have an IPO moment. And for the most part, when they do have that IPO moment, a lot of founders don't even have any equity left because they've been diluted all the way down. So you got to be in business to make money, and not to keep trying to raise capital. I say you can't be half pregnant. Either you're running your business or you're raising capital. You can't be both at the same time.
Do you think it is because many founders are very short-term thinkers now because of very famous philosophies, retire early? Okay, I'm gonna get money, I'm gonna get lots of capital, and then I'm gonna keep on selling my stake, and I'm gonna have lots of money in the bank, and I'm gonna retire early. Do you think that has played in people's mind because the earlier entrepreneurs wanted to build companies for their generation and for the next generations? Nowadays, they want to just sell it.
Maybe, but I don't know the stats, but it's not a lot of people that get to do that. Raise a lot of money and put it in their own bank and retire early. It's not enough people that successfully did that should justify this psychology that companies think they need to go out and do these valuations that they don't even know that are real or not and try to bring in a bunch of money. And the capital markets are very tough right now. That's why we're doing a lot of things with security tokens and bringing in new mechanisms to bring in capital to help projects have enough funds and support to grow. I think a lot of it has to do on people's, not everybody, I'm not generalizing, but unnecessary wants of the world, because things like social media, keeping up with the Joneses, all that's on steroids. So people want to bring in a lot of money so they can say that they're successful. That doesn't mean you're a successful person. It just may mean that you have money. What you do with that money, like grow your business, hire people, donate, help people, to me, that's what makes you a successful person. But if you're trying to raise capital because you want a nice car or a nice watch or live in a nice house to show the world that you're successful, that's a failure to me. And you should be able to do all of that very strategically building a business. And unless your business is a business that's just to raise money and do nothing with it, that's where I have a disconnection with people. I don't understand. Even when they put projections in decks that I get from me, I'm like, your projections, I know all these companies ask for it, but they're worthless to me. You have no idea if you're going to hit these numbers. This is you made up a slide. Like, go and build something and sell it. And then we can look at it. How do you scale this? Is it priced right? Are you getting the right costs for your developers, for your components? Do you have the right distribution channels? Is anybody out in the market discounting your product? Like, that's how you build a business. The amount of time people spend on decks and trying to raise capital is astronomical. And to me, my company motto has been forever is time is our most precious commodity. You cannot be spending all of your time trying to raise money. Build something and sell it to your neighbor. Sell it to the local store in your community. Don't try to sell it to UPS or try to sell it to IBM. Like, what people expect to do is crazy to me, because your mental health and your mental wellness is key. And your self-worth is key, and having accolades for yourself and what you accomplished is key. If you're not doing little baby steps to create revenues, build customers, one client, I'm sure that's how you built your company, one client at a time, one customer at a time. You lose one here, you get two there, you lose four, you get three. Like, that's how you build a business. But if you're spending all your time trying to get a huge whale customer or trying to get a huge investment, you're not, to my mind, you're not building a business. And the one in a billion that pull that off, they get the newspaper articles, they get the huge VC funds, and everybody else thinks that's realistic and that's reality. It's not.
I am 100% with you on this, because I've seen lots of madness lately from, nowadays, because of the war going and all, the bubble have bursted, which was there from 2021, 2022. If you would see the tech bubble that was going on, and everybody wanted to become an entrepreneur. And I asked people, why do you want to become an entrepreneur? I even saw some people here and there, they were working in companies, they were doing really good. But then they said that we are going to go and we're going to build a product. And I asked, what kind of product is that? They said, we don't know the product that we're going to build. And I asked, what do you mean? You don't have a product idea? You're going to leave your job and build a product? They said, yes, because we're going to raise money. We're going to do lots of things. So I told them that, hey, you don't raise money and you become rich. You have to spend that into the company. You have to raise more money and spend it. You're not going to become so rich. So I ultimately understood that people want to elevate their lives. They want to step up in their lives, become rich by having shortcuts. Yeah. And that's not the case. I think only maybe 0.001% person may be able to do that. But it cannot be done. And if you know the Snapchat, Facebook wanted to buy them, and Eric simply mentioned that, I'm doing it good, and I have this one idea, I want to make it really good, as Mark, you wanted. And he continued on with his ideas and kept on building the company. He was not looking for that simple route of making money. So I really like the idea that, that is the founder who is there, and he wants to hold on, and he wants to fight Facebook, who was a giant in front of Snap at that time.
Yeah, no, that's an admirable story. And someone that isn't there just for the money, right? I always say money's a byproduct of good people doing good work. And he built a great product, and he's a great team, and they've gone through a lot of ups and downs, but they've always figured it out. They've always continued to get people excited and using their platform and their technology. They got great brand partners. Now, it's not easy for them to compete with Instagram, Meta, TikTok now, the world. It's a lot of noise and a lot of places to choose from. So anybody that can keep market share, and they're a public company. So anybody that can keep market share and find ways to grow and find ways to be relevant in tech, very impressive.
Yeah. What kind of companies you've invested in? Is there an area that you look for into, or do you like look at founders and then you invest into that? How do you do the holdings? How do you find your pick?
Well, a lot of them come to me, which is great. I'm honored that companies and bankers and accountings reach out to me to help customers or help their clients or help interesting companies find their way. I have to align with the founders first and foremost. So I need to align with their ethics, their composure, morals and values. I need to see empathy. There's a lot of things I need to see in order to get my commitment to them. So once we align there, then it gets really fun, because again, there's a lot in my ecosystem where I can drop a company into that and it can create instant value and instant opportunities. So that's really exciting, and it's great to see founders that may have been flailing a little bit or a little lost, and then see them like have light in their life and light up. That's the most rewarding thing to me, when I can be a part of that. So I love looking for distressed companies because again, I see the world a little bit differently. They may be sitting on something that they're going after one use case or one market, and I always want to inspire people and motivate people, and cleverly I'll be like, well, that's great, we can continue to do that, but there is a huge opportunity over here that needs this, and I can open that door and we can create something really substantial, and then use those resources and revenues to help fuel your original use case or your original idea or concept. So the industries are across over 25 different industries, but I don't get involved with firearms, tobacco, adult entertainment industries. There's a few that I just don't touch, but we're in so many, or one degree from any industry that we may want to get into or operate in. But it's always alignment with people first and foremost. I need little to no ego and greed, and I just need good, decent people that have passion. They have, again, empathy is something I really look for the most. I need people to feel and understand another human being and understand that people could be hurting. I need you to be out in the world and experiencing markets, not sitting in an office coming up with ideas and pricing them where people can't afford to buy eggs or milk or certain commodities because of inflation. Like, you need to understand what's going on in the world before you put something out into the world. Because if you don't have that connection, then you can't be successful, I don't think. And I'm very sensitive to capital. So, I come up with ways for these companies. If someone put their tax earnings into your company before I got there, it's not fair that it gets locked up. It's not fair that they don't see anything until there's a liquidity event or it's a tax write-off if the company goes bust. So my mind is we need to start giving back earnings to your capital investors or your capital partners. And then once those capital partners start getting a little dividend back or some sort of juice back, they want to put more money into the company. So I always try to show companies you have support around you always, even if it was a friends and family round or if it was a Series A round. These are your capital partners. They believe in you. So let's do everything we can to get them some return back, because if you need more money or you need growth capital, you have your support system already in place. You just have to appreciate and respect them a little bit more.
Nice.
And the only way you get earnings or the only way you get the ability to pay them is you have to go out and earn. So it forces you to go out to the market and sell something. It forces you to create a business, not create a continued investment round company.
You're doing great stuff, Brian. Great stuff. Are all these companies US based, or are there other companies around the world, like in India or
all over the world? They're in non-sanctioned countries around the world. So yeah, they're all over the place, which is very cool. Because again, that helps me understand a global market, and then how do you service a global market, and how do you connect the global market with some of our technologies and networks and content creation. So it's turned into, finally in my career, I love what I do. I've always loved what I've done, but this is a whole new level of loving it because I'm surrounded by such great people and we're doing really great work. So it's the most rewarding period of my career.
Amazing. Let's discuss few things. How did you choose IoT? How did you look at IoT world right now?
Very exciting world, especially with companies like Nodle, Nodle. So if anybody listening, the Nodle Cash app is an amazing product in the app stores. It's the world's largest IoT network, wireless IoT network, connecting billions of devices around the world. Nodle's plan is to connect the next trillion things. So these are all, throughout our walking around our normal day routine, there are sensors and IoT devices everywhere. And it could be your headphones, speakers, refrigerators, thermostats. There's even sensors on shipments to connect things like humidity and vibrations and time and location. So we're surrounded by devices. What Nodle was able to do, which was really exciting, Misha Benoliel and Garrett Kinsman, the co-founders, I've been honored to be working with them since the company pretty much first came to market, be able to build an interoperable network to connect all these things. So with Nodle, it's a piece of software that you've downloaded the Nodle Cash app. You can see how it works like Pokemon Go. As you're walking around, you're connecting to IoT devices and you're earning our Nodle Cash cryptocurrency passively. So there's that component. And what the technology is doing when you download that app, you opt in to allow Nodle to use your phone to pull that little piece of IoT data. So it could be time of a sensor, it could be a location, it could be temperature, whatever that sensor is broadcasting out. We don't collect any personal information, so it's completely privacy focused. We know nothing about the user, just that little packet of data. Using your phone as a gateway, sends it to the cloud, and for that you get exchange or Nodle Cash cryptocurrency. Then how we built out the network even bigger is we have a Nodle SDK that's embedded in a lot of our app partners to give a bigger saturation, so be on more and more devices. And then recently the rollout of Click app, which is a way to confirm photos and videos are actually authentic and not fake or not altered. So it's utilizing this network and this technology to be able to authenticate that a photo was actually taken. It's actually of what it's taking a photo of. So it's getting a lot of tremendous momentum and interest, and that just launched last month. So IoT parallel network, we're able to connect and communicate and locate outside of traditional Wi-Fi, internet, and cellular, and connect devices that never had the ability to connect to a network before, because things like a cellular module is very expensive to that chipset to deploy on that device, and battery life, and then servicing that device to have connectivity. And things like Wi-Fi chips, same thing, very expensive, low battery life, and not practical. So when you can deploy an IoT Bluetooth device or even a printable label, it becomes very exciting what you can track, how you can track and locate it, and how you can access it through Nodle's network. So it is on path to definitely connect the next trillion things, and the ability to pull data and connect devices that never had the ability to connect to a network before is very valuable.
Amazing. I'll check that out. Nodle. Okay. Before we move forward, I want to tell people, if some of the people may not know what IoT is, it's philosophically and logically, somebody thought, or a group of people thought, that we have so many devices coming up. They should be able to speak in between themselves. They should have a world of theirs, and they should be able to do things for us. So making devices your slave is one of those things, or let me call assistant. So that's one of the things that's there. So do you think essentially that's what IoT is?
Well, I mean, if you Internet of Things, right? It's the ability of everything with where the future of IoT is going can contribute to that Internet of Things, especially as low cost printable tags come out, like an RFID chip. The RFID, very short range and very small packet of data. I mean, it's proven to have value, but as far as data collection and what it can do, it's very limited, and security. So when you have now the ability to use Bluetooth, which is a longer range, more security, and a larger packet of data can transmit through that, and a low-cost abilities to put self-harvesting Bluetooth printable tags on things, everything can now be part of that Internet of Things. It could be things like memorabilia, it's great for insurance companies. Having a Bluetooth label on a UPS or a FedEx or a USPS shipment, you have the ability to have further connectivity for asset tracking and asset location, even after post-delivery, which gets pretty interesting because a lot of shipments get misdelivered, lost, or stolen. So if we have the ability to have another network on top of the traditional one, such as an Internet of Things connectivity network, where you can continue to track and locate things, there's a lot of value in that. There's a lot of value in that in things like perishables or seafood or food, where you're tracking, is the front of the freezer truck at the right temperature, but the back of the truck's at the wrong temperature? Is there things to help offset foodborne illnesses? Is there things to offset making sure that produce and perishables are shipped, delivered, and consumed in the appropriate time frame? Being able to connect to agricultural or manufacturing processes through this network, it's basically saying, what can't you do? Very limited what you can't do. So it tends to become overwhelming. So when you're rolling out a network like Nodle, what are the best use cases that provide a lot of value? Initially, asset tracking is very important for the automobile industry, insurance companies, shipping and logistics companies. It fits very well within those systems and helps protect and track and locate assets, especially high valued assets. But then as it dominoes, I think you'll see Bluetooth tags like a UPC code or a QR code on everything, and knowing more data about that product, more data about that the life cycle of that product, the purchaser of that product, and ensuring that you really get to know who's supporting brands and products in a much deeper level, and being able to help them track and locate it. So, where this is going, I do see that an IoT device of some sort will be on everything, which can be concerning too. That's why I love Nodle. It's privacy focused. We don't know who those people are. So when you have a giant network and tracking capabilities and ways to collect data, you have to be very careful with that and ensure that it's being used in the appropriate manner.
Right. The possibilities are endless. There are like lots and lots of possibilities, and the IoT ecosystem is growing as we speak.
Well, also on that point, like when people say, oh, that's like Apple AirTag or the Tile. Yeah, but Apple does not communicate with Google or BlackBerry or any other phone devices. So if it's not interoperable, what's the point? It's in a closed system. So when you look at Nodle and its ability to track IoT devices and connect with IoT devices, no matter what they're broadcasting and no matter what operating system, that's where you actually have true connectivity on a global scale.
Right. Yeah. I mean, as I said, there are endless possibilities. So right now and in the future, you'll be able to have spaces and places and hotels where people can, in Japan, there are places where people do not need to go and someone else to take their bags and place them in the hotels. They can simply go to the room. They'll have everything on their phone. I see that they can go to the room, scan the QR code, and it would connect to their app, and it would know that it's the person. Just for example, Brian is going to a hotel, and it would know that it's Brian, and it's going to be there for 3 days. After that, Brian's access is gone, and somebody else would come in. It's changing the world. That's just very, very simple use case of it. With the same use case, there would be locks and sensors and devices where people can, the property brokerage can go in and say that, hey, you can go and check. You don't need keys from me to come in and open the door. You can go and check inside, and when you come, the access is gone. So these are like very, very small use cases of what IoT devices is able to do.
Absolutely. No, you spot on. And like you said, the opportunity is endless. Yeah.
So how do you, with all the IoT devices, there's like lots of data they collect and store, how do you manage that? How is that done?
Well, it's through a cloud network. The Google's network's in a cloud environment, pulling those packets of data from. We see IoT devices everywhere, which is also concerning. And we have solutions to help secure those IoT devices. And once a device that has our technology on it, such as your mobile phone or a smart device, and you're walking through, you'll see it light up like a Christmas tree. You're pulling packets of data from tens, hundreds, thousands of devices, depending on where you're walking. So if you think about it in a security aspect, devices can see those devices. So there needs to be another protocol that helps protect that and block that. Just there was a lot of crime a few years ago that got a lot of headlines where a burglar would put on their Bluetooth search by a car. and they would know that in that car there is maybe an Apple AirPods, or there's something in that device that's broadcasting out, that they would be well worth their time quickly smashing a window and stealing it, or finding what's in there. But if you can secure those devices through a network like Nodle, then you start to even add another level of protection and another revenue stream for not being able to connect and access the data that Bluetooth device or that IoT device is broadcasting out. So that's very much one of the most important pieces of having this type of network and being able to connect, locate, and secure those devices.
Great. Do you see if there are any upcoming innovations that you think that would possibly have a huge impact in our lives? Because IoT is going on from quite a bit time, and do you see that it's going to be a game changer? It's going to change our lives. Do you see anything like that in your network or what you're doing right now?
Oh, for sure. To me, it's the evolution of the RFID tag, or that little device. So this will go from that to everything being an IoT device when you have a network like this, and the ability to not have to, like, this is the scanner. That's the good part too. You don't have to implement more equipment to be able to scan. Like RFID, you have to implement equipment. If everything gets tagged and you're going through a grocery store, or if it's in the back of a shipping truck and those boxes pass that scanner, you don't need to add more equipment. That's why Nodle's grown so rapidly. It's 100% software. So when you have little friction or least cost to that, then you have the ability for really a global scale movement. And then you have the ability for people to earn too. Like, for example, all the customers that may be using Nodle's network to track assets as part of the Nodle network, and if I have Nodle Cash on my phone, I can run around all day and connect to IoT devices and earn. So it's a revenue stream for me too. And the more opportunities going through Nodle, the more business models that are using it, the more demand for the network, the Nodle Cash cryptocurrency, NODL, will go up in value. So if you're out there earning and you're out there connecting to devices, and you're, again, like Pokemon Go broke the mold with that, you can actually, maybe at one point earn enough capital to be life changing, because you're a gateway to earn just by having it on your phone.
Is it all around the world that people can do it, or at certain places?
Everywhere. Yeah, all
Everywhere.
around the world, global network.
Okay.
And it's known as the world's largest wireless network without building a single cell tower or Wi-Fi base station. It's completely software based.
And what does Nodle get out of it?
Think of it like a telecom. So the giant network, building this network and connecting IoT devices to smart devices, allows for manufacturers or vendors or equipment makers to be able to access the network to locate their assets in the world. So maybe Samsung wants to know how many refrigerators are out in the world. They can utilize a network like this to connect to devices and be able to pull that data. Maybe shipping companies want to utilize things like I was talking about, the future of labels being Bluetooth printed labels, to have a further ability for more transparency where their shipments are going during and post shipment. So the use cases are a lot based on asset tracking, temperature readings for pallet shipments inside of trucks or inside of warehouses where food or perishables may be on. As it evolves, there's a use case now, or a customer now rolled out in Europe for the insurance company and the automobile industry for helping assist with cars that have been stolen or lost. That can even apply even further down the car to things like rims that get stolen, high valued accessories that cars may have on them. So it's getting those use cases going, getting those pipeline of manufacturers that want to utilize the network, pay for access to the network to find their assets in out in the world.
In IoT world, do you think there is a marriage going on between IoT and AI? Is it gonna change lots of things? What do you see? Just for example, if there are devices and we mix it with AI, would AI be able to get IoT devices to do things, to talk in between themselves, maybe in a positive way, and or maybe AI goes sentinel as we saw? What do you think? What are your opinion about that?
For sure. this isn't the company's Nodle's philosophy. So I'm not speaking on behalf of them. I'm speaking on my carefulness with AI. So I'm not the biggest advocate for AI for a lot of reasons. I think it's very diluted down where the focuses are. From my perspective, again, working around the world and knowing how powerful AI is and what it can really do, I want to see it all, as much as possible, being used in agricultural, food manufacturing processes, fresh and clean water processes, even clothing and apparel. And the reason why these are on the forefront of my mind is that nobody should be hungry, thirsty, without clothes and without shelter in this world. There's just too much wealth in the world that's happening. So I'm all in for AI to help those efficiencies and processes and help correct as much as possible that. I don't want to
Healthcare research.
Well, yeah, healthcare research for sure. Anything to help humanity to see less people, to know people suffering, is where I want to see all of AI initiatives, not ChatGPT, not BuzzFeed using it for writing articles, not all of these millions of fragmented use cases. If we took all of that time and power and brain power and focused on how do we feed everybody with this, I'm all in. I'm all in times 100. How do we make sure everybody has clean water with this? But the crap that I see and the excitement around AI, even on the VC world and investment banking world, pouring billions into companies that have this AI that's being used for, to me, a foolish use of what it can do for humanity. So that's my standpoint. So I don't, again, for clarification, I'm not speaking on behalf of Nodle with that. So it's unfortunate to see all of these companies now, even though they had no AI initiatives, throw an AI initiative in so they can go and get capital, because that's where most of the capital is going into. And you're probably building software products that use AI in some of your clients, because that's the buzzword right now. But I would really disappointed once again where there's an opportunity with a lot of money, a lot of resources, and a lot of great technology that's not being used, in my mindset, for the best outcome for humanity and life. Everything alive needs water. We need water. And people don't realize that is a scarce commodity, and it's going to be a big problem one day. But to see AI being used in creating a news article and taking the journalist's job away, and we're reading news that's created by a computer, that freaks me out. Like I always assume there was some journalist integrity that's fact checking things to ensure that what they're writing about is as accurate as possible. And even though it's shifted a little bit the last decade, now I'm even more embarrassed that we're reading something that there's not even a human being that was associated with it, and that's our new facts. I think it's a very scary place to be.
Or the support centers, the AI is speaking like a support executive. In few companies, Google showcased it, and you couldn't make out that it was an AI. But I think somewhere when it was a single use case, Sundar Pichai and his team just simply asked few questions and it replied. But I am very sure that when people would throw in lots of things towards the AI, it would not have few answers. But yeah, it's just taking jobs there as well. Even graphic designers are scared right now because it's creating graphics on the fly. And yeah, there would be few really good jobs gone. Content writers, filmmakers, and everyone would have those problems. Yeah, AI has to be used on really great things like doing space research, doing medical research, and all those things. I think that would be really great with farming and all those things. And yeah, those are all the things that are going on.
Couldn't agree more. But this is one of the things I learned a long time ago. I have to focus on what I can control. I can't control that, but I can control within our holdings our cleverness and ethicalness on how we bring that type of technology into our holdings, because there's a huge ethical component to it. And one of our younger guys, great guy Gary, he joined my team last year. He's opened my eyes as to the long-term benefit of AI as for humanity. He's probably right. The long-term benefit, we are a better civilization for it. I don't live out there. live today, and the people that I love and care about live today. So I can't connect with that. I need to connect with what is the best use of these technologies, and again, brain power of people that are creating these technologies. What is the best use case that helps people today, helps people keep their jobs, helps keeps costs down, helps make sure people have access to clean, fresh water and food and clothes, and have the best ability for some sort of shelter. Like that's where I want to see the use of all of this in today's world. Granted, maybe 200 years from now, the AI that was created today and the movement that was created today made life so much better then, and God bless all those people that are living then, but I'm not, and neither is the people that I care about and that I'm responsible for.
Right. As the time's moving by, humans have been in a zone of time and space. So I think with AI, time is gonna move faster, and we're gonna get things which we may have gotten way down deeper in the future. But at the same time, if there is an addition of quantum computing with AI, it would bring lots of things quite faster than they were supposed to be, because quantum computer, when it would realize its full potential with all those qubits, would do 150 million times faster computing than the current computers. That's changing. IBM is doing a lot of research into that, and China, USA, and some Indian companies are doing a lot in quantum. So 5 to 10 years, quantum with AI would do a lot of things.
You're right. Absolutely right.
Moving forward with our next thing, it is crypto and blockchain. Can you dive deep into what are the fundamentals of it, how it's built and what was the need?
Yeah, I'll dive into how I used it. So I've been involved in digital assets, blockchain, crypto, and tokens since inception. Even one of my companies I built, Payback, in 2008, had this mechanism in it. But I've never been a speculator or buyer of things like Bitcoin and Ethereum and tokens that have made people millionaires. I stopped investing into companies or projects and things if I'm not part of it. If I don't know what's going on, then I'm out. I learned this in 99 when the stock market collapsed. I've learned this in 08. I don't need to learn this anymore. So from my mindset is, okay, here's a new medium, a new asset class for building community, full transparency of a blockchain where you have the transactions or a ledger of some sort of transaction, whether it's commerce or a trade or some sort of from A to B in a public environment. To me, that's exciting to me, because I love the idea of operating as a public company. I love full transparency. I love always giving full transparency to all of my companies and holdings, whether they're from our partners, our capital partners, or even our customers or clients. So to me, okay, this is great. Here's another way for a currency that could be created for our own ecosystem, or a utility around our own ecosystem, where we can further reward our customers, our future customers, even our employees. And then when it evolved into having exchanges where other people could participate in that and buy into that, that's where I got really excited. Most meme coins that are out there, or cryptocurrencies that are out there, there's no real value behind them besides popularity in the community. It's people fighting over what they believe will be the next biggest coin, but there's no business behind it. That's where I've evolved over the last decade into security tokens. So this is where I play. So I don't play in the crypto world. I don't play in this token world. I play in a world where it mimics what I believe are the future of stocks and bonds and commodities. These are regulated digital securities. So that's what we built with Diamond Lake Minerals, DLMI, the public company that I took over in August. We're a hybrid approach that's connecting traditional securities with the future of digital security. So for me, that's where we play. We have mechanisms that are regulated through our partnership with INX, where our subsidiaries, or our businesses underneath DLMI's parent umbrella, there's going to be opportunities for people all over the world to buy in to that business and be part of that business. So we'll have our US stock investors to be able to buy our traditional stock, and we'll have global capital that will be part of our businesses because they can help fuel the company. They can earn from the company on a revenue share. They can earn from a higher price point on that security token because more people want that token and want to be part of that company. So when you bring in these two worlds together, that's what excites me about things like crypto, things like blockchain. If that wasn't being developed and that wasn't being adopted, the evolution of that in a regulated environment, security tokens wouldn't have existed. So I'll take a beat there, but for me, it's that currency, that exchange of buying into a company and getting a security token back, that's revolutionary. That's where you don't have to rely on traditional money. You don't have to rely on traditional markets. If a company wants to go and raise money, they can do a security token offering now and promote it around the world to accredited or non-accredited investors. They can use regulated exchanges. There's new ways to bring in capital, and there's new ways to bring in capital that doesn't dilute your equity, because your offering for a security token could just be, we're going to put this offering in the market. We have this one division in our business that earns X amount of revenues through doing A, B, and C. Your security token will be attached to those revenues, and you'll get X amount of revenue share per month, per quarter, per year. So you protect the equity, you invite capital in for revenue sharing or profit sharing, and you diversify. You diversify your need for capital, how you can get capital, and how you can legally bring in capital.
Let's go a bit deeper into it. Difference between stocks and a security token.
To me, there's no difference in the mechanics, because it's the same.
Let's take Apple as an example. Apple has a stock, Apple has a security token. How does it work? And what's the need to get a security token?
So Apple as a stock, you need to be KYC'd. So you have to have a brokerage account somewhere that allows you to take your cash or your tax earnings, or if you're borrowing on margin, to be able to go through your brokerage account to buy the stock. Then you've exchanged your cash through the brokerage account. Now you own the stock in your brokerage account. That's the model. As a security, and there's only certain geographic locations around the world that you can actually buy an Apple stock, depending upon what your brokerage house is, where you live, where you reside. So you're very limited into the amount of shareholders. Even though it can be a lot, you're very limited to the amount of shareholders that would be able to own Apple stock, for example. Now, as a security token, especially through INX, which is the leader, I believe, and the authority in regulated SEC digital security tokens, you have the ability in non-sanctioned countries, so North Korea, Iran, certain countries can't participate in this, but 99% of the world, through INX, you open up your INX account through their exchange, and if Apple follows like what we're doing at DLMI, and they want to offer a security token offering for their next iPhone that they're releasing, where they would do a revenue share off all those iPhone sales, they can offer a security token to the globe to buy into that iPhone 16, 17, 18, whatever number. And then they can bring in someone like them. They could bring in hundreds of billions of dollars with that kind of offering. So it helps, not that they need the cash, but it gives the ability for another way for capital to come into a company to help fuel the growth of the company. So then that iPhone 17 goes out, sold more iPhones than they've ever sold ever in their history. Profit sharing goes back to all those security token holders, and that's it. Their offering was only attached to that iPhone. Maybe they extend it, maybe they do an amendment and they offer it to the next iPhone because it was a really successful model. So hopefully that describes it. You have the ability to bring in capital from people like you and me, individuals, through an exchange on a global landscape to help fuel a business model or to help be part of a business model.
So it gives someone like me who's sitting in India, because I don't need to do KYC in US. I cannot do it. And I can buy into security tokens of really good companies, and from here. At the same time, how do we make their valuations? How do we know the valuations are correct for security tokens?
So it's the same process of doing an offering. You have to go through SEC processes. So the valuation is done by your accounting your auditors, whoever's doing your work. You do your filing for an offering. I want to do a $10 million security token offering through INX, and we're going to be building pickleball courts and blah, 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 whatever you want to use the money for. So the filing has all of the legal and accounting and compliance done and signed off on. So it's a much, there's no guarantees that everything's going to be successful, but it's a much deeper level of work and effort and compliance where you're really protecting the capital and you're giving full disclosure that this is what we're doing. This was signed off on by our legal. This was approved by, if it's INX, for example, it's approved by their compliance to put this offering into the market. So it has a lot of eyeballs and scrutiny onto the offering before it goes live. And once it goes live in a regulated exchange like that, capital should feel a little bit more comfortable that there's a really good chance that this is going to be a very successful offering because of all of the work, the experience, and the seasoned professionals that are around it. So you have a little more comfort rather than just going online onto Binance and buying a coin that you don't even know who is running that coin. You know nothing about them. You know nothing about their use of their proceeds, but you assume that it'll go off and take off on Twitter or Discord and that a bunch of other people will buy it like a pyramid, and you're hoping that you're at top of the pyramid or as close to the top of the pyramid as possible. That doesn't interest me because there's no regulation there and there's no safeguards to help people in the event that I'd rather you go to a casino and throw it on red or black. I mean, there's really no difference.
The reason when people ask me, have you invested into Bitcoin and Ethereum, I say, I do not know what's happening there. I cannot put $1 million there and tomorrow it might become $2 million or it might become half of it in a day or two. So I don't know what's gonna happen there because I don't know who's regulating it. So yeah, I mean, what you are saying is a really, really good thing. Is that into place right now? Is it working right now? I mean,
yeah, security tokens. Yeah. So INX, they raised $75 million on their security token offering. They just did a great deal with Republic and the Republic note through Avalanche. They raised a lot of money. So the mechanisms are there. We got to continue to educate people to understand that the biggest issue is that people don't understand, not everybody, but majority of the world doesn't understand crypto, tokens, NFTs, security tokens. So there's a big educational gap, which is why I went very strongly in on our public company, DLMI, being something familiar to an investor that understands buying stock. Buy our stock and you are in the digital asset industry with how we're bringing it in legally and in a regulated environment. So we have that familiarity. We need to keep talking about the difference between security tokens and crypto and NFTs and other digital assets, and that this, to me, is the safest, smartest evolution of stocks and bonds. Bitcoin, known as a commodity, so to me, it's no different than buying gold or silver or any type of other commodities on an exchange. Ethereum, to me, is a risky environment because it's expensive at times to do those transactions. But a lot of great projects are built on Ethereum, so it has its own ecosystem. But again, I look at those and say and understand what's great about them is the community build. What was great about NFTs, because it happened during a global shutdown, it built communities, it kept people engaged, it helped keep entertainers and actors and athletes relevant because they were part of these projects. It gave them abilities to earn. So I look at all that and say, okay, there's a lot going on here. How do we bring that into what we're building and really provide value and really de-risk as much as possible our work and efforts to bring value and returns to our security token holders or our stockholders? That's my only job, is to protect them and to bring value. And I can learn from all these other things that I think are very risky. And now Bitcoin with their ETF, whenever that goes through, it just joined the ranks of the 1%ers of the world. So it's not what it set out to do anymore, in my opinion. Now it's going through the machine in that ETF being approved. now the big boys of the world, like the BlackRocks or the JP Morgans, the big institutions, they're going to buy as much as they can, and they're going to do what they do and resell it to the blessed clients that they have. So that doesn't, and that may take Bitcoin to millions and millions of dollars, but there's going to be a point where now the regular person really can't participate in that anymore. It's like an IPO moment. Your broker calls you, the broker calls a select few of their best accounts to get involved with an IPO. It doesn't go to everybody. So that's what I'm seeing with Bitcoin and what that movement is. I like that it's happening. I hope it gets approved, because that relieves me with banking and a lot of other regulations. Because if that gets approved, then it'd be very difficult for other banks to turn off your account because you may hold a digital asset somewhere, or you may have transacted with a security token, or you may have transacted with a crypto. A lot of banks are hurting people right now because they've done that, or they're turning off their account, or their account is locked. So I want to see that Bitcoin thing go through, just for banking, just for that type of environment. But I also disappointed because that wasn't the point of it. The point of it was for the world to be able to be part of something and to be able to elevate their wealth and enhance their wealth.
Right. Yeah. It started as a different purpose, and it's going into a different purpose right now. That's what happens with power. It had immense power on people, and people who have power would control it now. Something like OpenAI as well.
Yeah. Well, now that Microsoft is going to embed it everywhere.
Right. Brian, I could not overlook, you when you were talking, you have some beads on. Do they have some meaning?
Yeah, I mean, I travel all over the place, so everywhere I go, I try to pick up a little memory of where I was. So they all kind of tell a story of a location that I've been. I pick up a bracelet. Nothing crazy expensive, just something that I think looks cool.
Amazing. You've traveled to India ever?
I did in early 2000s. The Lila, I can't, I was saying it wrong. Beautiful resort. They were one of our big beauty customers, so I would service their spa and their salon. The Lili Hotel and Resort. I mean, it's
where was it?
Oh, they have a few of them. Mumbai. Where's the other one? Bangalore, I think. They got a few of them.
Leela, I guess.
Leela, yeah.
Yeah, Leela.
Like, I always feel like I say it wrong.
Yeah, it's Leela. It's in Rajasthan as well, Jaipur and all those areas. Yeah, great. You're invited. Anytime you come, we are on the foothills of Himalayas, and very near to Dalai Lama's place, like 4 or 5 hours away. And yeah, I mean, it's an amazing place.
Beautiful. Well, I'm definitely gonna see you soon. Get a mango lassi and some chicken tikka masala.
Yeah, amazing. Mango lassi is gonna be available after April, because it's quite cold right now here where we are. So we see extreme of cold and hot. We're in north of India, just next to Himalayas. And yeah, it would be amazing. You are always welcome here, and maybe we can work on something. Thank you very much.
Love that. Thank you.
Yeah, thank you very much for giving so many insights to us, and we hope that people would enjoy this podcast and would gain a lot out of it, and would use the two things you mentioned in IoT and in the crypto world. And it gives me an advantage to go and invest into US securities right where I'm sitting from without doing any KYC. So yeah, that's great. Thank you very much.
Thank you, sir.